You are listening to ChartingWealth.com for Thursday, the 15th of June, 2017. We see stocks are down for the day. The S&P 500, the Qs, which is the NASDAQ 100, down about 4 times the amount that the S&P 500 is down. It's down 0.43%. S&P down 0.12%. Gold also down a little over 0.5% at 0.52%. And bonds way up 1.54%. So let's jump right in to what's going on. We see that we have movement above our weekly trend line on the S&P 500. Again, as we delve into the S&P and look at what's going on, we look at the 2-day chart. We continue to see that we have tracking up of the PPO, the price percent oscillator. The derivative oscillator continues to lose steam, and really we've had a lot of sideways sliding. Now, we did just have the 2-day chart end. It's an up green candle as far as the average pace goes, and what we need to do is to just keep exploring and digging down into this. When we look at the 4-hour chart, we see a little bit of a different scene. We see up movement over the last day and through the 13th on into the morning of the 14th, and then of course a doji in the afternoon, which means a lot of indecision. But as we look back all the way through the 9th, and in fact you can go all the way back to the 2nd, and we really don't have much movement above that. It's just been sliding sideways. We did end the day up a little higher, actually up a little bit higher than we were at the entry point back on Monday the 5th, but still not where we want to be. We want to see the S&P 500 really moving up. If we do have a crossover going up on that 4-hour chart, we could look for a jumping in point there, but we have not had that happen yet. Now let's keep moving along. We go to the Qs, that's the NASDAQ 100 on our weekly chart, and we see that we are moving toward a weekly vertical crossover going down. Again, the Qs down 0.43% for the day. That 2-day vertical crossover occurred most recently. That occurred on the 12th, and again, two-day candles of strong down movement on the Qs. Now it's blasted all the way through that weekly chart too. And of course, we've been out of this trade for a while. It was extremely good to us, and we will see if indeed we have a weekly vertical crossover. We might have one by the end of the week. If that happens, then of course we'll be looking for a potential down trade in the Qs. What's a down trade in the Qs? Well, something like PSQ, which is actually the short of the Qs. It's going up as things are going down on the Qs itself. So we'll continue to track and watch what's going on. Let's keep paying attention. Next, we go to TLT, which is the 20-year bond fund. What do we see it doing? Well, when we look at the weekly chart, we can see that bonds are up 1, 2, 3, 4, going on 5 weeks. And we see that the derivative oscillators gain some energy. Price percent oscillator continues to move up. Remember, we had our weekly vertical crossover going up, never stopped the weekly vertical crossover all the way back on the week ending the 3rd of February. Now, we had some sideways sliding for a while through February into March and down. Then we started having that strong up movement at the end of March. Bit of backward sliding there toward the end of April, and then strong up movement starting in the middle of May up through the present. So again, things are looking quite nice as we delve a little deeper into the charts. We see that our 20-year bond fund, we had that 2-day vertical crossover going up back on the 19th. Things went up nicely. We had a little bit of backtracking on the pushing through the 2-day trend line, but never crossing over going down on that 2-day chart. But again, concerning, very, very much concerning where that candle ended on the 12th, getting close to the weekly vertical crossover. We don't like to penetrate our 2-day trend line, but again, the biggest concern we always have is if we have a crossover on the PPO. The price percent oscillator is our biggest indicator of confirmed down movement. Now we have a 2-day candle that's a green open box moving back up. We'll just continue to watch that and see what we see there. As we look at this 4-hour chart, what do we see? Of course, we see strong up movement in the morning, followed by strong up movement in the afternoon. And of course, the entry point in the afternoon was that opening price of $125.23, waiting for that 4-hour chart to cross back over to parallel the up movement on the 2-day chart and that weekly chart. So that's where we are as far as bonds go. Bonds reacting a little bit more as one would expect, being inversely correlated to stocks. With stocks going down, bonds ought to be going up, and they are now. So that makes us feel a little bit better. Let's look at what's happening with gold. Gold down 0.52% for the day. We have a spinning top on our Heiken Ashi candlestick, a spinning top going down, a red spinning top. And of course, we've broken through our weekly trend line and our 2-day trend line, getting close, hasn't happened yet, but crossover going down on the weekly chart. As we hone into that, take a look at the 2-day chart. Of course, we now have, with the close of this candle, I'm mistaking the 50-period moving average chart, getting closer to a crossover going down as the derivative oscillator continues to move down. Haven't had that happen yet. That might also happen by the end of the week. Of course, it gives you another good reason to be signed up for and receiving our text alerts for weekly vertical crossovers. How do you do that? Well, if you subscribe to our daily chart reviews at chartingwealth.com, their instructions are there to text to the number 33222 the word charting wealth. One word, no space between charting and wealth, just one word. And again, you fax charting wealth, that word, to the number 33222. Now we see that gold is continuing to move down on the 2-day chart. And of course, as we plug into that 4-hour chart, what do we see? Well, that 4-hour chart continues to move down. We now have a spike over again going down on the price percent oscillator. We do see, though, that downward energy continues to diminish on the derivative oscillator, and we've got a really interesting formation in the afternoon. Lots of up movement, lots of down movement. Our Heiken Ashi candlestick is really sliding sideways again. For the day, gold was down 0.52%. So that 4-hour chart continues to do us right. It is a total trading chart for us. You have questions, problems, concerns, we are here for you. We are happy to help. All you have to do is go to the website, sign up for chartingwealth.com. We don't sell our email list. We keep that information only for ourselves. And of course, all the good trainings there at the Charting Wealth website. We update you via the daily email as to what's going on. You also get signed up for all the good training. And don't forget the latest training that we have on your way. We keep telling you guys about it. It is the new chart that we have created for Bitcoin. Those of you who want to follow Bitcoin, know a little bit more about it. The chart that we have created is very important and wonderful, and we are going to be sharing that with you in the very near future. But in order to get it, you have to be signed up for and receiving our daily chart review. And again, it's free at chartingwealth.com. You can also write us with any questions, problems, concerns you have, cw@chartingwealth.com. Thanks so much. We love hearing from you. All the best from the good folks here at chartingwealth.com.